Well, this is the root, I think, that most important topic we face today in terms of electrification and greening of the economy and decarbonization is where's that input material going to come from? So politicians love to talk about meeting these climate goals, love to talk about electrification, but when it comes down to it, without copper, without other metals as well, but without copper, none of this can happen. And the shortage of copper has a huge potential to derail these climate goals.
The commodities complex has seen an extraordinary bull rally this year in 2024 with copper and gold reaching new highs. What's next for both these metals as well as the underlying equities associated with these metals? We'll talk about this with Bryan Slusarchuk. He is the CEO of Great Pacific and a co-founder of K92. We'll talk about those projects as well. Welcome to the show, Bryan.
David, thanks for having me on.
Let's talk about copper and gold first, starting with gold. So as you know, $2,300, $2,400, a lot of people in the industry telling me that this is a great price for the miners. Well, have the miners been moving in accordance to your expectations, what they should be doing at these current price levels for gold, Bryan?
I think it's a really interesting time here. You've had underlying commodity prices move very bullishly over the last several months, over the last 12 months, but you haven't seen the equities move proportional to that. We've started to see the senior golds trade well. The mid tiers are starting to inch higher, but we haven't seen movement yet in the smaller cap names. And that's quite typical in these bullish environments. The seniors who are just generating a lot of cash flow at today's prices move first, the mid tiers next, and then later in the bullish environment, you see the juniors move. And we started to see a little bit of activity, a little bit more liquidity in the juniors, but for large part, they haven't moved a whole lot off of their bottoms. And I think that's where the real opportunity is. That's where the big parabolic moves usually come in bullish commodity environments.
How long does it usually take for the junior companies to respond to a price surge? For example, let's say gold spiking to $2,400 this year. How long would that take before the juniors start to ramp up drilling or ramp up their fundraising efforts? Basically just to pick up an activity.
I think we're right at that juncture. And the reason I say that is you've had a year now of very strong commodity prices. All of the majors have seen improvements in their balance sheet. Most are awash with cash. And now you're starting to see a little bit of M&A activity out there. And that's one of the things that usually prompts some action in the juniors. Also, there has been financing available for the last couple of years for good quality junior explorers. So you've seen a lot of money go into the ground, into drilling over the last several months. In addition to the larger companies being awash with cash, we're going to start to see some discoveries. It's a numbers game. The more drills that are turning out there around the globe, the more discoveries get made. So it's really a confluence of events here that I think is shaping up really well for the smaller cap names in the space.
Yeah, I've heard the narrative that M&A could pick up because these larger companies have cash. But Bryan, put yourself in the shoes of an executive of a Barrick or Newmont. Why would you want to acquire a company at record high valuations right now?
Well, it's interesting. With K92, which you mentioned earlier, we actually purchased that asset from Barrick Gold. We paid $2 million cash and the promise of some future payments. And that company ended up trading to date around $2 billion. And I think the best days are ahead of it. We bought that when nobody wanted gold assets. Barrick disposed of the asset. We picked it up as a junior. We're focused on exploration, focused on that particular project, and it's really paid off handsomely for early shareholders. So if I'm in the shoes of a Barrick or Newmont, I know the best explorationists in general, the companies that are focused on exploration, are the smaller cap names. So rather than conducting a whole bunch of in-house exploration, etc., it's easier to pick off some of these juniors that have already de-risked projects in jurisdictions that the majors want to be in. We've just recently, I've been in Papua New Guinea for 10 years. Newmont just entered Papua New Guinea in the last 12 months via their acquisition of Newcrest. Newmont, the world's largest gold miner, is making a huge bet on PNG. That's a bet we made several years ago.
No, I understand that, but would you, let's suppose you were a senior, would you wait for the gold price to trail down a little bit, correct, before making acquisitions, or are they generally timing agnostic here?
I think for the right projects, they're timing agnostic, but I've very much, throughout my career, had the mentality of an explorer. And our view is no matter what the price of gold's doing, advance good projects, the market will come. We can't worry about what the price of gold's going to do tomorrow. We just have to advance good projects. When we acquired in Papua New Guinea, as an example, the Kanantu asset that ultimately was the foundation of a $2 billion company, nobody wanted gold assets. People didn't want to hear about gold projects. Nobody wanted these assets. That's why, with $2 million cash up front, we were able to acquire just an amazing land package. Nobody else wanted it. So, as a junior, I think we have to be price agnostic. We have to just move forward, build these projects out as fast as possible, as efficiently as possible, as prudently as possible, and the market eventually comes to us at some point. But it's very tough to predict, when that time comes. I do think right now, with all of the majors out there awash in cash, you'll start to see some more M&A.
Brian, why do you think gold spiked the way it did this year?
I'm a big believer in gold and have been for a long time. I think that what we're seeing out there in general, in simplified terms, is just a growing distrust of paper currency, of fiat currencies. And I think you've seen it around the world. Almost every central bank in the world has been accumulating gold over the past 12 months. I think that you have central banks nervous about exposure to the US dollar. They want to de-risk that somewhat. But you also see the general retail public, not just in North America, but around the world, starting to pay attention to gold, starting to understand that gold is a hedge against uncertainty. It's a store of value. Gold is money. And we're seeing gold shine in these very uncertain economic, geopolitical, social times. Gold's doing what it does best. It's protecting wealth and storing wealth in times of uncertainty.
And those same drivers, the distrust of the fiat currency system that I guess were in place early in the year, is that still in place today, June? We're speaking middle of June.
Absolutely. I think you continue to see central banks around the world accumulate gold, and that's month after month after month. And we all talk about China, we talk about India, we talk about big purchasers like that, but central banks from countries, all sorts of different sizes, all sorts of locales, are accumulating gold. I think we also see Main Street consumers starting to understand that they may be better off having a portion of their wealth in gold, which is real money, versus paper. And anecdotally, there's no better example of that than Costco selling out of gold every month, limiting the amount of gold that retail consumers can purchase. And I think that's just a fact of life right now, that whether you're on Main Street or within a central bank, you've got growing distrust, growing unease about fiat currency.
Well, certainly there's been a lot of interest in the metal, as you said, especially from the East. China's gold demand was up 68% 8% year to date. This is Chinese retail investors, according to the World Gold Council data. Bryan, what is it going to take for these mainstream investors to move into the gold equities? Do you think the price of gold needs to be even higher still? We're at a certain price before we have a rush of mainstream interest into the GDX index, for example, or even the GDXJ.
I think everybody should consider or should have a portion of their wealth in gold, in physical gold. That makes sense. But from an investment or speculation perspective, in gold bull markets, historically, we see gold equities outperform the price of bullion itself. Gold equities outperform gold in bullish environments. We haven't seen that yet. And there can be a few different triggers as to what sets off a hot market for gold equities. It's not necessarily correlated directly with a rising gold price. I don't believe we need $2,500 or $2,800 gold to set off a bit of a frenzy in equities. In the junior space, what we normally see is a couple of things. One, when the majors start to make a lot of money, they build up cash, they know that the best place to get bang for their buck in terms of putting more ounces on their book is through acquisition. So you see M&A pick up. At the same time, exploration success, discovery really sets off bull markets for the juniors, for the explorers. With all of the money out there right now around the world that is going into the ground, I think globally we're going to likely have some major discoveries over the next 12, 24 months. A discovery, two discoveries, three discoveries that can really generate wealth can fuel that speculative frenzy. So I think the setup's very good.
Okay. The common criticism to today's environment is that, well, if the gold equities haven't outperformed gold on a year-to-date basis yet, what's the point? Because I want that leverage. Why put myself in the risk of management and operational risk when I can just own the underlying metal? I want that leverage. It hasn't come yet. So what's the point in investing in the gold mining sector now? How would you counter that criticism?
Sure. Like I say, I think everybody should own physical gold, physical silver. That's a store of wealth. In terms of creation of wealth, there's no better spot to be in a bull market for gold itself than the gold equities. Historically, we've seen gold equities outperforms gold itself in really bullish environments. We haven't yet seen it in this bullish environment for gold bullion, but I think one of the most dangerous phrases in speculation is this time is different. And I don't think this time is different. I think, like we've seen in multiple cycles over the years, gold equities will create more wealth than gold itself in a gold bull environment. So I think as a store of wealth, you've got to own gold, you've got to own silver physically. In terms of creation of wealth, you want to own the equities.
Okay, copper is the next metal we'll talk about. It hit a record high of $5.11 a pound before what Reuters called a ferocious short squeeze in the futures market, brought it back down. So, what happened there? What is the narrative that once again propelled copper to new highs?
I think there are a few things going on over the longer term. You've got a push for electrification, decarbonization. You've got continuing industrialization around the world, and all of this drives copper demand, and copper demand is growing. At the same time, you've had very difficult conditions in terms of equity markets to fund copper explorers over the past several years. So you've had a relative lack over the last decade of money going into the ground. So discoveries, new copper discoveries, have lagged the growing demand. And I think that we are really in a tinderbox here where it won't take much to ignite the copper market because of that imbalance, the supply demand imbalance that's coming. Maybe the market got a little bit ahead of itself. There was a little bit of a short squeeze. I'm not a trader, but we're going to see fluctuation like that over time. But over the midterm, longer term, I think it's really clear that this electrification, decarbonization, the consistent industrialization of the planet is going to lead to more and more copper demand. Supply is not catching up with that. So over the long term, we should see copper prices higher.
Okay, well, as a trader or investor, one might be, I guess, optimistic about this prospect of a shortage, but this presents a broader challenge to society at large. What does the industry need to do to fill this supply gap in the future?
I think the more money that goes into the ground in terms of exploration, the better. I think certain countries are ahead of the curve in terms of permitting new mines, new opportunities. Other countries are behind the curve and will need to make regulatory environments more efficient, more streamlined, more fair for exploration, development, production entities. We work and we've worked for the past decade, like I mentioned, in Papua New Guinea. And this is a jurisdiction that not many people know about, but it's a great jurisdiction in terms of mining. It's known as the land of giants for good reason. Some of the world's biggest copper, gold projects, deposits have been found in Papua New Guinea, but it's also a place that values mining investment, and therefore it's a place that's attracting a lot of exploration capital right now. There are other jurisdictions I wouldn't touch with a 10-foot pole because no matter what you find, it's going to take a decade plus to ever permit a mine, no matter how good it is. And what people have to realize, there's no electrification, there's no greening of the economy, there's no decarbonization without copper. So if you're an environmentalist, you ought to be very supportive of copper mining.
Well, that's the point here. That's the key point you just brought up. I'll come back to your approaches in just a bit, but what is the government going to do about this? I'm reading this article from mining.com, and it's reported by the International Copper Study Group that the copper market is facing yet another year of deficits. 2023, well, last year was 114,000 tons. 2022 was 431,000 tons. We're entering an age of copper deficits that this article says is so large it could derail our climate goals. These climate goals, by the way, are set by the government. So if their own goals aren't met because there's a huge shortage, what are they going to do about this problem?
Well, this is the root, I think, the most important topic we face today in terms of electrification and greening of the economy and decarbonization is where's that input material going to come from? So politicians love to talk about meeting these climate goals, love to talk about electrification, but when it comes down to it, without copper, without other metals as well, but without copper, none of this can happen. And the shortage of copper has a huge potential to derail these climate goals. Yet the same politicians that are the loudest about climate goals and electrification and decarbonization, the same politicians that are the loudest about those lofty aspirations are often anti-mining, which is crazy, and we see that in the Western world. I'll tell you, I think that we're missing the boat here in North America. I think North America is going to come to a point where we wake up one day and realize we rely on countries all over the globe for the input materials we need to meet our own climate goals. So North America is not a place I do a lot of exploration work. There are certain parts of North America that are wonderful, of course, other parts that are horrible in terms of exploration climate. But it's a big question. I think what we need to do, the politicians, the government, the bureaucrats need to start having honest discussions about this. Either you want these climate goals to be met, or you don't. If you do want them to be met, you have to support accelerated copper production and development.
So you're saying some of these restrictive environmental policies, if you want to call them that, are putting you off exploration in North America?
Absolutely. There are jurisdictions in North America I just wouldn't explore within. There are some great jurisdictions around the world. There are poor jurisdictions around the world. And mining is what's needed to build a greener economy. Mining is the cornerstone of electrification and decarbonization. And I think in North America, with 4 or 5 year election cycles, we are prone to have lofty aspirations, but not put in place what's needed in terms of mining policy, development policy to support those goals. It's more political, ideological than practical. I think that at the top of every project, it's key to focus on health, safety, environment, community, social, but done properly. Mining is not only a great creator of employment and jobs, but it's the cornerstone of a greener economy.
This is from the Government of Canada's website. So I'm just going to pull this up. First of all, copper is considered a critical metal in Canada, along with aluminum and a host of other metals. There is a tax credit here supporting critical mineral exploration in Canada. This paragraph says to enable the exploration of critical metals, a new 30% critical mineral exploration tax credit is being introduced that would be available to investors under certain flow-through shares agreements to support specified exploration expenditures incurred in Canada. The tax credit is applicable to specific critical metals, including nickel, lithium, cobalt, graphite, copper, rare earth elements, vanadium, and uranium, among others. Are you familiar with this? Is this going to help?
I am. And, I'm sure it will help. It will foster some exploration. But like Ronald Reagan said, the most dangerous words or sentence in the human language is, I'm from the government and I'm here to help. And I think that this is a little bit of that. And I think that if government got out of the way and stopped putting up roadblocks to sensible, responsible exploration and development, we'd be better off. The fact is, government at all levels in Canada puts up roadblocks to responsible exploration, development, and mining. There are jurisdictions that are better than others. I do think that these flow-through credits, et cetera, and support of critical metals exploration, of course, that helps. That will fuel some activity. But I think that the first order of business at any level of government in North America should be, how do we streamline existing processes, make them more efficient before we start thinking about tax credits?
Well, the Biden administration has loaned money to lithium producers and deposits in the U.S. on U.S. soil. So I wonder why the industry, industry leaders like yourself in Canada aren't petitioning the government to just provide subsidies or loans to copper and other critical metals deposits.
I mean, at the end of the day, in my business, for example, I would rather be exploring in Papua New Guinea. I'd rather be developing projects in Papua New Guinea. So I'm not overly active on the Canadian scene. As a Canadian citizen, of course, we're overtaxed, we're overregulated. Do we get value for our tax dollars? No. Can we streamline processes to make our economy better? Absolutely. But in general, I'm very focused elsewhere outside of Canada.
Well, let's talk about Papua New Guinea then. How long is a permitting time there compared to, let's say, a developed economy or country?
Sure. Papua New Guinea, it's a great place to work, and the permitting process is very thorough. So when you have an exploration license application in, that exploration license application is reviewed by some excellent technical people. They're not politicians, they're technical people, geologists, engineers, community members. They review the exploration license application and they review it on its merits. Is this responsible, environmentally sensitive exploration? Is the plan in line with what the community wants? What are the community benefits over time? How does this impact negatively or positively the environment? They make recommendations based on the work plan that's been submitted. You may need to alter that plan. And then ultimately, it gets recommended for approval. Once you have that license in hand, you can go out and work. You don't need multiple permits to drill. You don't need to be going back to government every second week to get an additional permit. Once you have that license in hand, you can go to work, and it's very efficient. The number one thing in Papua New Guinea, as it should be, is community consultation. The community has to be on side with what you're doing. And what we found in Papua New Guinea is that it's a mining country. They understand the wealth that can be created through mining, the jobs, the benefit in terms of environment, health, safety, community. So if you're doing things properly, you end up getting some great community support. So the Papua New Guinea regulatory environment is a very good one. What we've seen in Papua New Guinea, we were very early movers to this new era of PNG exploration. We were there, several years ago with K92, and I'm there obviously now with Great Pacific Gold. But we've seen over the past 24 months a new rush in Papua New Guinea. Newmont, the world's largest gold mining company, just entered Papua New Guinea. As I mentioned, over the last 12 months, they've entered Papua New Guinea in a big way, a multi-billion-dollar bet on Papua New Guinea via their acquisition of Newcrest. So now you have the world's number one gold miner, Newmont, there. You've got the world's number two gold miner, Barrick, there. You've got K92, which I was a part of, showing that you can go from discovery through to development in a systematic and efficient way. So Papua New Guinea is fast becoming, in my opinion, one of the world's hot destinations for mineral exploration.
What are the how would you evaluate the cost of drilling and exploration there relative to a North American jurisdiction?
Depending on where you are, it's quite good. Papua New Guinea is a very mountainous place. You've got certain projects that have road access. Two of our three projects, our key projects, have road access. The other is helicopter assist. In some of the more mountainous areas, you have helicopter assist programs, so costs are a little bit higher. But when you have road access, costs are in line with where they would be in North America. I mean, Papua New Guinea is next door to Australia. Australia obviously is just a hotbed of exploration. Papua New Guinea has had a great resource sector for decades. So you've got experienced geologists, engineers, drill contractors. You've got great Papua New Guinean geologists around. So this is a mining country, and as such, the costs are in line with other mining countries around the world.
Why have you decided on Papua New Guinea in the first place? I mean, presumably you could have picked any developing area to work in. I know that West Africa has rich deposits in gold and copper. South America, as well as is the copper capital of the world. Have you looked into other jurisdictions before making a decision?
Yeah, absolutely. So in 2014, we had an opportunity that came up. 2015, we ultimately transacted on that opportunity. And the opportunity was a project in Papua New Guinea that Barrick Gold owned. It was a project that had never made money. It was a mine that had never worked, and it was on care and maintenance. Nobody wanted to buy gold assets at that time. The market was horrible, and Barrick wanted to sell this asset. So we evaluated it on its technical merits. We loved it. We thought there was huge exploration upside that was being missed. We went in, and with $2 million cash up front and the promise of some future payments, we acquired this asset. Well, that asset today has 1,600 employees. It's traded as high as a $2 billion market cap. It's a big contributor to the Papua New Guinea economy. And by 2027, it's slated to be producing approximately 500,000 ounces of gold annually at some of the lowest costs in the industry. It's a real special project. That's been a big success, and I think the best days are ahead of it. With that, in the rear view mirror for me personally, I'm no longer on the board. I was the co-founder of the company, former president. I was president from inception through to cash flow, positive operations, and commercial production. I started to look for other opportunities in Papua New Guinea, and we've acquired in Great Pacific Gold close to 3,000 square kilometers in Papua New Guinea. We actually have ground that's contiguous with K92, where we've just put out some spectacular early stage soil results, getting ready for drilling. We've got some other ground to the southeast of K92 where we'll likely start drilling over the next couple of weeks. And then we have a big 1,400 square kilometer land position in Papua New Guinea on one of the islands in East New Britain province, which is a spectacular place. That was a former producing mine. It's advanced stage exploration, and we'll be going to work there. So Papua New Guinea for me was a natural post our success with K92 mining, which continues to be a real growth story. K92 just put out some spectacular news this week, drill results, and the best days are ahead of K92. But for me personally, Papua New Guinea was a real natural based on that success. And that's where Great Pacific is focused.
The one risk that some emerging markets jurisdictions face is nationalization, as you know. So I was reading that BHP was operating in Papua New Guinea's Western Province in the early 2000s, and what happened was they wanted to exit from that project because there were environmental concerns. The government wanted them to stay. Long story short, they reached an agreement whereby the government of Papua New Guinea owns 37% of the shares of that particular project, and it was the other 63 were sold off. So, how would you address the concern that investors may have that nationalization needs to be addressed?
Yeah, Papua New Guinea is one of the rare emerging markets where nothing's ever been nationalized. And I think that's why Papua New Guinea, in addition to the great geology, is attracting so much new investment. That's why Newmont decided to go there this year, make a big bet on Papua New Guinea. Barrick's operating there. At K92, we went from a discovery through to development into production, over the span of a couple of years. And we've found it to be a great place to operate. There's never been a nationalization. I think that Papua New Guinea is becoming one of the world's top destinations for exploration for good reason. I'd be a lot more worried about certain jurisdictions in North America than I would in Papua New Guinea.
For sure. All right. Well, thank you very much, Brian, for educating us. We'll put the links to your company in the description down below, so make sure to follow Brian and his company's work there. I appreciate it. Thank you. We'll speak again soon.
Great. Thanks, David.
And thank you for watching. Don't forget to like and subscribe.